Welcome back to Equity Mates Investing. Ren, as part of Super September, I did a review of my super portfolio, just to remind myself of what's in there.
Yeah.
And there is an ETF that I spoke about on Get Started Investing that is in my super fund that I want to talk about today. It's the Banks ETF, BNKS.
Yes.
The Global Banks Currency Hedged ETF. And if anyone thinks that banks aren't boring, I suggest they look at this ETF.
Oh, I think you just screwed up your delivery there.
Banks are boring.
All right.
For anyone who thinks banks are boring.
Well, look, Australian investing gets tagged with banks and miners, boring, nothing exciting. So you're swimming against the tide here.
Yeah.
So make the case.
This is an ETF that gives exposure to the largest global banks ex-Australia.
Okay.
So that is very important.
Yeah, you've already excluded Australian banks.
I've excluded as the world's most expensive banks.
But also one of the world's best growth stocks that looks like a bank, in Commonwealth Bank.
This ETF top holdings include JP Morgan, Bank of America, Wells Fargo, Royal Bank of Canada, and HSBC, the big global investment banks. Why am I excited about it?
And consumer banks.
And consumer, yeah. Why am I excited about it? Listen to these returns, Ren. Last 1 year, 38%. Last 3 years, 25% per year. Last 5 years, 21% per year. Over the last 5 years in total, it's up 150%. Since inception, it's pumped out 11.5%. per year.
Okay, well, that's kind of coming back to index level returns.
Yes, but that's because you got to consider what's gone on in the banking landscape over the last few years, which we'll get to that. But last 5 years.
When was inception for it?
So 2016 was when the fund hit the markets.
Okay.
So 10 years, call it 9 years. Let's compare that to the ASX 200. So the last 12 months, ASX is up 7%. For the last 5 years, it's up 53% in total. So compare that to 153%. If you look at the S&P 500, it's up 16% over the last 12 months and up 98% over the last 5 years.
So just to recap for people who just heard you say percentage a lot.
Yeah, good percentages.
Over the past 5 years, you've got the ASX 200 up 53%. I assume that's pre-dividends.
Yeah.
And then you've got the S&P 500 up 98%. And then you've got this Banks ETF up 153%.
Correct.
Over the past 5 years.
Correct.
Okay. So that is starting to build the case why banks aren't boring.
Yeah.
That is the past. And as we always hear, past performance, not an indicator of future performance.
Yes.
So
Yes.
why is this exciting going forward?
The investment banking world is having a bit of a renaissance at the moment. And we spoke at the top of the show, big deals are getting done. The IPO market is warming up.
Yes.
And this is where investment banks come into play.
Well, for example, this EA deal that we spoke about at the start of the show, the bank that is providing the $20 billion in debt for the leverage buyout is the largest holding in this ETF. JP.
There you go.
Yeah.
For context, 2022, 2023 was not great for investment banking. That was when interest rates skyrocketed, IPO market died, M&A froze up, and geopolitics events started to really heat up. However, since then, 2024, things have roared back to life. So investment bank revenues are back. JP Morgan reported revenues up almost 50%, Citi up almost 35%, Goldman pulling in fees of $7.5 billion. Global investment banking revenue is back. So we are seeing a period now where there's much more activity in mergers and acquisitions. And, as we've spoken about, IPO market is warming up as well, which is great news for investment banking. So that's the first factor. The second factor, Ren, is deregulation. It's obviously one of Trump's big mandates. He came into the election to his sort of next 4 years saying that there is going to be lighter regulation on the financial industry. Not to get too much into specifics, but one of the key, pillars for this regulation is what they call the Basel III endgame, which is where they were really going to tighten up the requirements for banks to hold excess cash. However, Trump is delaying that. There's a report from Oliver Wyman that shows by Trump delaying banks having to hold this excess cash, it's going to put an extra $650 to $750 million into the bank's pockets.
I think you mean $1 billion.
Sorry, you're right, $1 billion into the pockets of the banks, which of course can go towards dividends, buybacks, and lending out cash. So this is an expectation at the moment. It sort of hasn't necessarily played out, but another factor why so many people are getting excited about the banks.
at some point, the additional cash reserves will go on.
Yeah. But until, like, we've seen what Trump does, keeps kicking cans down the road, and he's obviously
He's
very
not going to be
favourable.
president forever.
He won't be. He won't be, of course.
I don't know. Like, yeah, it's interesting for me. Like, when you initially said I want to do a segment on the banks, like, for me, over the long term, I struggled to see how this bank ETF will massively outperform the market, because in my mind, banks are kind of just like GDP plus, in the sense that particular banks will outperform, they will disrupt, they will innovate, they will find ways to be more efficient. But the global banking sector as a whole is really, you would think, just a function of like, it's GDP, it's like corporate growth, and then like banking as a whole is reliant on, like consumer banking is reliant on savings for, like, they can lend what that people deposit. Is there an argument that it will ever be, like tech, you could say, I could see how that would massively outpace GDP. Is there an argument that banking can do that?
Well, the stats show in developing countries, the banking's outpaced GDP by a factor of about 80%, and in developing, it's 200 to 400%.
Over what time period?
I don't have that data.
Where did you get that?
I got it from our good friends Claude.
Okay.
Yeah. Because I did look at this. China's GDP, for example, grew 8% annually. The banking sector grew 15%.
Yeah, okay.
Financial services outpaced economic growth by a factor of 2 to 1.
Nice.
So I know what you're saying, but I think the stats kind of show otherwise.
Yeah. The third leg of that stool for me, it's like, like corporate earnings growth would drive like M&A, and new business formation would drive all this stuff. Then like consumers getting wealthier, saving more, taking on more debt, buying more expensive houses, all of that stuff will drive banking. The third leg of the stool is more people being banked.
Yes.
Because there's still huge populations that are underbanked. Now, the top of your ETF aren't exactly going to benefit from that. JP Morgan, Bank of America, Wells Fargo, Royal Bank of Canada, HSBC, maybe, but there are some banks that are seeing huge gains in that space. And we've spoken about a few of them, particularly with some of the active managers who focus on India that have come through, like HDFC Bank and the like. But there's one bank that I want to talk about.
But okay, before we move on, Ren, I do want to just touch on that point, because for me, this is the interesting part for the banks, because unfortunately, as global inequality increases, particularly in countries like America, and let's put some stats to it, we saw a 4.2% increase in high net worths in 2024 globally, with the population growing by 2.6%. These are the banks that actually capture a lot of those people.
Yes.
$83 trillion is set to be passed to younger generations by 2048, according to the World Wealth Report. US dollar millionaires are rising year on year, with high net wealths growing at a pretty significant pace, almost 8% a year in the US. And so these banks are positioning themselves for those people. And so I think, unfortunately, as the global inequality rises and more people get richer, these banks tend to pick up those people. And you might question, well, where do the revenues mostly come from? If you look at Morgan Stanley, roughly 50% of their revenue is serving high net wealths, first corporate, whereas Goldman, it's a little less, 60-40 towards the corporate side.
All right, Bryce, a bit dystopian. We don't love to see inequality rise, but whilst we fight to change the system, it's incumbent upon us to do our best within it. Yes. And so this might be a way to do it. Am I able to talk about my favorite bank now?
Yeah, go for it.
So I want to talk about a bank that first came up in a Pimp My Portfolio segment. I'd never heard of it. And then we spoke to someone who was investing in this Brazilian bank. And I've kept it on my watch list ever since. And it is nuts, some of the numbers. So given that you introduced the topic of banking, I thought it was a good opportunity to bring it to the table. The company is New Holdings. It's listed in New York. The ticker is NU. Let me tell you about it quickly. It's a Brazilian bank, digital first. It's up 1,500% in the past 5 years, and yet it still only trades on a 33 times price to earnings ratio. So it started in Brazil, and it now has 60% of Brazilian adults as customers. And now it has expanded to Mexico and Colombia. And just to give you a sense of the growth in the past 5 years, so this is across all three countries, it's gone from 42 million customers to 123 million customers, 31% annual growth rate. Revenue from 336 million to 3.7 billion, 85% compound annual growth rate. And profit, it went from losing 15 million to making $637 million over the past 5 years. But here's the number I want to share. So it entered in Mexico and Colombia. In less than 5 years, it went from 100,000 customers in Mexico to 12 million.
Jeez.
It grew customers at 190% compound annual growth rate.
Wow. What's the market not getting about them then? Why is it relatively cheap?
Well, it just keeps growing into its valuation. Yeah.
Wow.
So who knows where it goes from here, but like, it's impressive.
Where's it listed?
New York.
NASDAQ?
No, New York Stock Exchange.
NYSE?
Yeah.
Nice.
For me, like the Latin American story of Mercado Libre and Nubank and just like getting people banked and connected to commerce through their phones is a really incredible story playing out.
Yeah, I was going to say there should be a Latin American ETF, but there's heaps. So
There's heaps.
yeah.
And the question again with all these emerging market ETFs is what's at the top of those ETFs? Because I would guess it's not Mercado or Nubank.
You might want to take that back because the top holding for the iShares Latin America is New Holdings.
Okay. All right. Well, I guess I slightly take it back. What I don't take back is that when it comes to emerging market ETFs, you've got to be careful because you've got to look at all the holdings and whether they align with the thesis that you may have, be it, an emerging consumer class or digital and internet penetration. Does that align with everything in the ETF or just some of the holdings? But fair play, you got me.
Nice. Well, that brings us to the end of today's episode. We love hearing from you. If you could leave us a rating or a review in your podcast app or like and subscribe to our YouTube channel as you're watching this, it really does help us get in front of new Equity Mates listeners. And it shouldn't take you more than 20 seconds. But Ren, that's it for this week. We'll pick it up next episode.
Sounds good.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.